Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I want to speak about the BTC USD and give you my complete multi-time frame and order flow analysis. Now, as usual, to keep the analysis as educational as possible, first I will be covering the technical side, then we will move to the order flow. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see. Now, the first thing that we must notice is that at the moment the market here is testing exactly the previous cycle high. In fact, from here the previous bear market started, the market created a move to the downside. Here is where we had the halving, and after the halving the market entered into the bull market that we have all experienced, and now we have once again entered into a bear market, and the market went all the way down to test exactly the previous cycle high, which is also previous monthly resistance turned support. Now exactly inside of this area, this is where I expect the market to print the low of the current bear market, which could actually already be printed. It could be already be placed when, with this move to the upside that we're currently seeing, the market rejected this support area. Now, what I expect from here is more bullish continuation. However, I do not expect the creation of new all-time highs before May 2024. Only after May 2024, that is when we will have the next halving event. Only after that, I expect the market to print new all-time highs. Now, dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how the market is currently breaking above an incredibly strong structured zone. In fact, this area was acting as previous support all across the area. We then had the break below the zone. At that point, that previous support became resistance here. Currently, we're seeing the break back above the area, and as we know, previous resistance, once it gets broken to the upside, becomes support. As the previous support, once it got broken to the downside, started acting as resistance here, is the same concept. So in a situation like this, where we are breaking above the area, what we could expect is a retest of the zone and then the market to reject it to the upside. So essentially for the market to respect this area as new support. That was previous resistance and is now turned support. Now, if we drop down on the daily time frame, what do we have? Now, first of all, from a daily perspective, I did speak about BTC USD a few days ago when the market was around this area here. I made a full breakdown explaining all the reasons for which we wanted to see this correction to retest the previous resistance turn support, which is exactly what the market did here. And then we wanted to see a rejection to the upside. And in fact, that is exactly what the market did. The market created a huge rejection to the upside after having retraced to the zone that we wanted the market to retrace to. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. However, at the moment, what we can see is that the market just created a massive impulse to the upside. After an impulse, what you expect is the correction and then the continuation higher. Now, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that we have the 0.32, 50% and 0.618 Fibonacci retracements all lining up in this zone. Now, if we zoom out a bit and we extend this zone to the left, what we can see is that this is exactly the support that we were identifying on the weekly, which now is also visible on the daily, which was turn resistance here, which is now once again turned support here, is the exact same zone that we were speaking about previously on the weekly time frame. By zooming out, we simply can see it once again. What this means is that if the market here will retrace to this zone, we will have both the support from a structure perspective that we have previously identified and also the confluence of the Fibonacci levels in this zone, which create a confluence of support at this area from which we could expect a potential rejection to the upside. So essentially what should happen here is that the market should be attracted to this zone as confluence of support. So essentially it should be attracted to the area to want to test the liquidity that we have inside of it, and then it should get rejected to the upside away from this zone. Now, if we check the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, so essentially hedge funds, we can see how with the last reports, first net positions got increased, and now they're getting decreased once again, indicating that first they were positioning to the bullish side of the market. These are speculators, so institutions in the market just to make money, so riding the swings. They were adding longs, the market now created a move to the upside, now they're adding shorts, decreasing their net positions. So they do expect a correction as well, which increases the probabilities that we will actually see this correction. So if we do get the move to this area, and inside of here we start to see institutions once again adding longs, there is a good probability for a potential rejection higher. So if we do get the correction to this zone, how we could be approaching that potential longing opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for a potential move to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdown, so the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the lifetime access price of the mentorship program, all the way down to 97 euros from the 497 euros one-time payment. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll over, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires. However, spots are limited, so if they get filled before the timer goes to 0, then the offer will end anyway and price will go back to normal. So I really suggest that you join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.